I believe if one worries, one doesn't need to worry. But if one doesn't worry, one needs to worry. There's cyclical inflation and there's monetary inflation. And I think that people are not looking, and the Fed is not adequately looking, at the fact that when there's a lot of debt and you create a lot of debt and money, which of course is a great stimulant, also one man's debts are another man's financial assets. And so what we've seen is that as throughout history, we can go back literally thousands of years, as the debts rise, and there's somebody's financial assets, there's a balancing act that becomes increasingly difficult. And so when we look at what's ahead, we do know how these cycles work. We know that you have a recession to a recession, and on average they've been about 7 years, and they're shorter when you start quicker. And so we're in a cycle where there was a lot of money and credit. I mean, from an investor's point of view, think about how bad that debt is. I'm holding cash. Last year I lost 7% to cash. One would have lost 7% in buying power. And now if you have a 5% inflation and so on, the things are changing. And so because they're changing in that way, inflation psychology is going to change. They don't want to hold the bonds, or they don't want to hold the cash, much less. And so we have an extra risk that they may sell those bonds and that cash. And when they do, then that creates a bigger deficit in funding, because not only do you have to sell the Treasury, what the Treasury has to sell, there has to be enough buying to buy what the sellers are selling. And when that comes up, it puts the central bank in the position of either having interest rates rise a lot, and that shuts things off, or having to come in and fill the gap in a bigger way than it was done before. So as that psychology changes and wages change and all of that, we are on the brink of that happening. So yes, we have a big issue pertaining to inflation. The trade-off, it appears to me, that a high enough interest rate to adequately contain inflation of what we might think is adequate is too high of an interest rate for the markets and the economy. So that the trade-off that the Fed is going to face will be an even greater, more difficult trade-off between inflation and growth. Think about it. The tightening that might be priced into the market might take it to 2%, maybe give or take a bit. 2% interest rate, when you have something that could be a 5% inflation rate and you have the supply-demand imbalance, is something that is really a problem. I think that the Fed's forecast that it was transitory was obviously wrong. Okay? I think they are misunderstanding things. I think they put too much on the cycle, a normal cycle. Why are real interest rates, since we started, when we started setting inflation index bonds, they were 4% real. Okay, how did they get to minus 1%? Why is the equilibrium in interest rates 500%, 500 basis points lower than it was back then? There's something bigger going on. And that bigger thing that's going on is the accumulation of debt, because that's buying power. That's stored buying power. So everybody's got to believe that that stored buying power is real. Yet if you think about how are you going to get that? Can everybody sell those bonds and actually convert that into purchases? No way. So if you look at history, throughout history, there's this bigger thing that's going on, this bigger debt cycle thing that's going on. And so I think there's not enough attention paid to that. There's going to be, when you're stuck with two trade-offs, too much inflation, or you're stuck with too much economic weakness, then you navigate through the middle, and that means something like stagflation. And so I think we're entering a period of stagflation. And I think the political and the wealth gap issues and so on create a set of circumstances that it's not easy to get out of, because everybody needs more money. And so do you get real money? Taxation is the way to do it normally, but it's taking money away from somebody, whoever it is, becomes controversial. The one easy thing throughout history that's always been done is the printing of money, because nobody even pays much attention to where the wealth is coming from. So what it does is, like, everybody got the check and nobody had money taken away from them. And so it's politically easier, but it devalues. Think about the enormous amount of supposed buying power that's in these bonds or other assets. I want to buy a bond, so I'm going to give a lump sum of money. It'll take me 50 years to get back what I gave, and then I'll begin to earn money after that, because it's a 50-year return in nominal terms. If you do it in real terms, I will never get back my money. I'll continuously lose my money. So that, for a creditor, that for a holder, is a difficult thing. And when you get that swing, that's an important force, I think. Happens, or what happens, right? I mean, how do you actually get there? I just want to bring back the American dream, you know? I benefited from the American dream. You know, my dad was a jazz musician, my mom stayed home, I went to a public school, it was a kind of a lower middle class thing. And everybody should have the American dream. Not only is it fairer, but it also means that you tap the greatest population, because you don't know where the talent's going to come from, and that's a better set of circumstances. And so, yes, in terms of, like, education is one of the best investments that you can make. How can you have the educational disparities and so on and so forth? The issue really is there's not bipartisanship to deal with it. Like, if I was president of the United States, I would have a bipartisan cabinet, and I would say that there should be something the equivalent of a bipartisan Manhattan Project to find out how, with sensible engineers who understand enough about the economy, how it works, how to both increase the size of the pie and to divide the pie well, because you have to raise productivity as well as redistribute. Redistribution of wealth has never worked. You know, the Russians take the wealth in 1917 in the war, and they think they've got wealth, but it's productivity. Wealth doesn't last. So yes, you have to go back to that. So you've got to do certain basic things right. I think the most important thing is that you have every society, every person over a period of time has to earn more than they spend. Okay, a society that doesn't earn more than it spends inevitably is going to live on debt, and there'll be limits to that for the reasons we talk about. And they have to work well together to be productive in order to raise the living standards, because you're not eating the paper you're producing in the form of debt, you're eating what you produce. So you have to be productive. If we don't do those things, being together, bipartisan, and bring the extremes, and somehow the middle, a thoughtful middle, analyzes how to do that, and we don't then get that productivity, yes, I think we're going to be in a problem. But that's what it's about, and the question is whether we can do that, right? So yes, of course, I agree with everything that you said and more, because I could list more things that need to be done. I think it's how you spend it. There are so many cost-effective things that actually produce high returns to spend it on. I think of education by way of example. It's cost-effective to educate well. Okay? And it also makes a fairer society. What a great return on investment. And history has shown throughout societies that pays off, but we don't. So I think that if you spend on things that produce productivity, which I see a lot of and a lot of other people see a lot of, those are great returns on investments. The one thing we didn't talk about is the third big force, which is the changing world order, which is the rise particularly of a competitive power, a great power to challenge the existing. I saw that all three of those, the financial problem, the internal conflict problem, and the external, when they have happened together, it's a very risky set of circumstances. And when we look at that, I think I get your thoughts, but China is a rising great power. I mean, since I started going to China in 1984, per capita income has increased by 26 times. And so if you were to say a competitor, we use the words war, there's a trade war, there's a technology war, there's a capital war, there's a geopolitical war, and there's a military war. Or you can call those competitions. They've become very effective competitors, and there's more than 4 times as many Chinese as Americans. So if you get them to have half the GDP per capita, they'll be twice as large. I've been through 5 major debt crises in the United States when we couldn't pay our bills. And I know that we know about debt restructuring and if the debt is in your currency and how you can deal with that. And I'm not arguing one way or another. I'm saying that that can't be taken, and hope is not a strategy, that being strong yourself and us doing the first 2 things right is very, very important. So I don't think we can hope. We have to deal with the elements of the realities. I would say, even the biggest question is a political question. If people work well with each other and they operate where they're doing the finances right and they don't get into a war, then I think that they could be productive, and if they don't. So in any case, it's a test of our systems. And number one thing is I want to go back to the American dream of being strong because we're working together and we're dealing with the wonderful blessings that's created. But even questions like even the media, where's truth? And where are the facts? We have to make ourselves strong, most importantly, I think, and I think you agree with that. And so we are living in a changing world order. The reason I wrote this book, or I did the study for myself and then made the book, was because I needed to see those patterns. And it makes me worry. And you worry. And I believe if one worries, one doesn't need to worry. But if one doesn't worry, one needs to worry. Because if you worry, then you start to do the things that will prevent the things you're worrying about. So that's, I guess, my punchline.